I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market found a bottom early last week, and then rebounded sharply, well, for 2 days until it met another sharp sell-off late in the week. Monday saw a deluge of tech selling early in the day, and the S&P 500 fell 90 points basically just after the opening. That was some good follow-through from the selling in the previous week, but then bargain hunting came in, and the mega caps started to move back up, and there was some buying in the depressed stocks and recovery stocks, and the market did a good job coming back. That brought a big turnaround, and the indexes came back most of the way on Monday after that big early drop. Investors expected Powell's confirmation hearing to bring fireworks. It is ridiculous that it's a platform for these senators to spew their political agendas with their slanted questions. Powell sounded tough on inflation, and he continues to reiterate that they will use their tools. He did seem concerned about inflation. Brainerd, the following day, really sounded the same. And, of course, they're going to use those tools, well, just like they did before when they were shooting for 2% inflation. Their mandate, by the way, is not for 2% inflation. They make that up. Their mandate is for stable inflation, and they just decided that that was a 2% level. So what's wrong with 1%? What's wrong with 3%? They just make that stuff up, and then they act in ways that are ridiculous. Well, instead of these senators asking these stupid questions, they should be outraged by the actions that we've had from Powell and the Federal Reserve over these years. And if I were somebody with a vote on the confirmation, I would vote no. I may sound pissed. The CPI, up 0.4% for the month. That was 7% year over year. All of that just landing on seniors and fixed income, people that are on fixed income. And the Fed makes these stupid mistakes and has those people paying for it, and all of us paying for it. Really, if you look at 21 and the projections for inflation in 22, that is a 12% Fed tax. That's a Biden tax and a Fed tax, Powell tax, and you can go all the way back to Yellen and Bernanke and Greenspan. Greenspan started the activist Fed, and they're all responsible for it. And all the presidents that were around at that time that did nothing to take away the power from the Fed, who makes constant mistakes and gives us these big whipsaws in the economy. So yeah, if I sound pissed, I am. They manipulate the economy, they manipulate money, and it creates these huge distortions. That's, you see, the result of what is going on. On Thursday, stocks tried to move up again, and then after the attempted rally, the PPI comes out up about 0.2%. It was estimated at 0.4, but still year over year, the PPI up 9.6%. Massive input costs into businesses. That can only mean a squeeze in margins, and that inflation is not over yet, this inflationary bulge. So that early rally on Thursday fizzled, and tech stocks came back under pressure. The NASDAQ was up 164 points Thursday morning, 165. Fell to down over 400. It was more than a 580-point reversal in the NASDAQ. Well, NASDAQ did rally and hit the resistance that we expected. It was a perfect spot for that downside movement. Now those stocks that were the mega caps, the growth stocks, the one that everybody was piling into, well, they're now the dog stocks, as money is moving out of those sectors and then into the recovery sectors. Friday brought more selling. The JP Morgan earnings, they were a big disappointment. Revenue growth, loan growth, those all disappointed. Though the top line did beat, but JP Morgan got hit. And with the financials moving down and techs getting sold again, the market moved sharply to the downside. It was down as much as 40 points, but then made just a tiny little bit of a recovery. And is waffling around here a lot on Friday. A little bit of firm tone here in the NASDAQ, firmer than the rest of the market, as those stocks got beaten up pretty bad, and we're getting some stability in the likes of Apple and Amazon, and those stocks are just on the firm side for today, and it's just a moment of downside rest that's going on. Really, what we saw in JP Morgan, this could really be the story during this earnings season, where there are revenue misses and warnings, and the stock market really does struggle during this period. So overall for the stock market, the action is really much in line with our expectations. The weakness in growth, the mega caps, comes as interest rates move up. And that money moves from those growth into the recovery stocks, and that gives you this big rotation that's going on. So the high market capitalization to lower market capitalization, that is what's going on, or money moving into cash, and that weighs on the indexes. And that's what we expected to see. And after 3 huge years on the upside, and the really significant, quick policy change by the Fed, and I would say it's going to be aggressive in here, then that really is really smelling like a pretty significant tone change. Well, the NASDAQ had a 9% correction on its low, the Russell 13.5% correction, moving to the downside. And there's a massive number of stocks that are down 50% or more. What does this mean for this bull market and these massive years on the upside? Well, I think it's over, that there are problems for the bulls, and they just think that this is another dip. Well, when they think that, that's when it really gets ugly. Stocks for the week, after an early attempt to the upside, are now down between 0.75% and 1.25% for the major indexes. That's here at Friday at midday. Bond market up about 0.75 point on the 30-year. The 10-year is down about 2 basis points to 1.74. Came up and hit our 1.8% short-term target. We think it's going higher. As a matter of fact, we think if yields pull back to about 1.68%, well, that's the sell futures zone. And you can see that on our Future Speak show, where we talk about those specifics. Gold, stronger on the week, and up about $24. We still have a short-term target of about $18.37 in this bounce. Silver up about 60 cents. So we're going to look for a little bit more upside, and it's getting help from a weaker dollar. Dollar had a bad week, down 0.8%, and we saw that top. Again, if you watch the Future Speak show on Wednesday, you will see all of that analysis that has been just really incredible over recent months. Oil, well, still surging to the upside. This is one that we didn't do great on in our analysis because we thought it would stop earlier on the upside, but the market is really expecting a big increase in demand. This is the 4th week in a row of advances, up $3 on the week, and oil is up $20 off of its low in just over 6 weeks. 62 to 82 something, just an amazing move on the upside. We think it's going to pull back over the next month, but we could be looking at $100 oil later in the year. Coming up, well, we're going to look at a preview of our stock sectors video. We're going to look at the country ETFs, take a look at South Korea, and at India, and of course, many, many more countries in that video if you become a level 2, 3, or 4 member. And you must see the Spider Sector Select review that I'm going to do, where I look at 99 stocks in about 15 minutes, and you're not going to believe the way to look at these stocks. It's just an incredible view that I'm going to give you right here, so you get an idea of the strong and weak sectors and stocks using our proprietary indicators. And then we're going to take a look at the 1 to 3 month view for the stock market coming up. All right, I want you to make sure that you go to our website, askSlim.com. If this is the first time you're coming there, at least become a free member. If you're watching this on YouTube, subscribe to the channel, click the notification bell, and then you will know when we put up videos, which we do 3-4 times a week. And like this video, give it a thumbs up if you follow us on Twitter. If you use Twitter, follow us on Twitter at askSlim. And any questions on our memberships, our huge offering of education and analysis, well, do write Matt at askSlim.com. You can also write team at askSlim.com. All right, this is a preview of a member video coming up. You're going to love this. RV is one of our cycle analyst experts. We now have four analysts on our team, an incredible depth in the team that does our analysis. And RV teaches cycle analysis just beautifully. He's looking here at South Korea and India. And of course, there are another 10 or so countries that he looks at in this analysis. And I think you're going to find it just absolutely great. Here is RV.
Okay, so this is the EWY, and we have been really quite bearish on South Korea for quite some time, but at the end of our last international markets video, we were talking about some bottoming action that was likely due to set in, and you can see that is slowly happening. We are really just more or less trading in a trading range here in the EWY, but you can see this nice bullish candle here, which is really saying that that 70 level is really going to be difficult for this to get below here, as you can see some very clear buying that is coming in every time we trade down there. And what we're watching for is a bottom to form, as I just mentioned, with a low due 1129 to 117. And on the upside, we are looking for a move to this 84.25 to the 86.67 level. And note that, yes, we do still have a negative pattern here as well. That's why we have this red arrow with a lower cycle low relative to the prior low. So when you have a bearish cycle, you'd only look for a lower high to form relative to that most recent high. Now, what would change that is if this rally really got going here and got through this intermediate 78.6 at 89.88, that would really turn this pattern into a much more neutral pattern. So I just wanted to raise that possibility here for you as well. This is the WisdomTree India ETF. Again, we've been really bullish on India for a while. This pullback, as we were looking at our international markets work, was really right on time. Got the pullback into the low and then have blasted off here off of that key low that formed the week of 1220. What we're looking for, we have a 61.8 at 40.77 and a intermediate term fib target zone from 42.50 to around 44.70 or so. So this is just a very strong pattern in a very positive mode, and no reason to fade this. We have this nice upturn in the weekly momentum as well, and note that nice bounce off the 34 week also. So everything is really lining up very favorably here in the iShares India. Still early, yes, it's already had a decent move off that 35 low, but any little dip will likely set up a movement back up given this overall really bullish trend that we are in here.
All right, this is a Spider Sector Select review. This is going to amaze you. Watch this segment, and I think you're going to see just a fantastic way to understand the markets. All right, last week I made a point that you should buy the strong stocks and sell the weak ones. And I got questions, well, how do you know which is which? And of course, you look at the tape and sometimes it's easy to tell what they're buying and selling, but I like to get a better look at that using our particular studies. Our level 4 and 4 plus members, they now have access to our market monitor. And I'm going to show you a version of that using the Spider Sector Selects and our 4 proprietary studies. And this is an amazing view of 99 stocks at a glance. It's 9 different groups, the 10 heaviest weighted stocks and the 9 particular ETFs. Now, we're not looking at the utilities in here because they're just not interesting to me, but I have it set up with 9 other sectors. And this really helps see the strong versus the weak. You get a clear look at the rotation that's going on. And I want to call it the great rotation because there is a massive money moving out of some groups and into other groups. So you'll be able to see that, or the individual stocks that are strong or weak, and how that money is moving from those one group into some of the individual stocks that I think are important. So let's take a look at this. I think you're going to find this fascinating. So this is a picture of our market monitor. Just to give you an idea of what we have in here, well, of course, here's the stock symbol over here, and this is the name of the company. This is the last price, the 52-week high and the 52-week low, and the PE ratio. So this last price is based on the close on Thursday the 13th, so I could record this just a little bit in advance of the show that we do here on Friday the 14th. So this is the askSlim Reversal Scout. That's this indicator. This is the askSlim ribbon. So it's our slim ribbon. This is our market condition indicator, MCI, and this is our option bias indicator. So these are 4 different indicators. There's some similarity in them. And the Reversal Scout is essentially a moving average that is weighted in a particular way that helps us not only see the condition or the momentum, but also gives us a sense of our cycle analysis when we use that. The slim ribbon is made up of 3 different exponential moving averages, an 8, a 13, and a 21, and this has great programming in the slim ribbon. And of course, when it's green, it's positive, and that means the 8 is above the 13 is above the 21, and when it's red, it's negative. The 8 below the 13 below the 21 exponential moving average. This market condition indicator is a really unique indicator as it has multiple time frames in it. And that essentially, for it to be green, it would mean that the monthly, the weekly, the daily, the intraday, all of them would be lined up in a very strong way. And that's a really good look at market condition of the individual symbols. And the option bias indicator is also very unique because it gives you a sense of how to bias your option positions. And when it's green at a level 3 that you see there, that's very positive. When it's this dark green at a level 2, it's positive but slightly overbought. And when it's orange at a level 1, it is positive but so positive and moves so far that it is extremely overbought and likely to give you a short-term reversal. So all of these indicators are really looking for swing traders and for option traders. So that's really the time frames that you use these indicators for. So let's analyze these 9 different groups and really get a sense for the condition of them. So here is XLE, and these are the top 10 weighted stocks in the XLE. And of course, we know that oil's been going up. It's been very strong. And look at these stocks, all of them. All of them have a solid green reversal scout and slim ribbon. The market condition indicator for Williams and KMI, well, you see these low numbers right over here, 16 and 18? That's a reflection of long-term weakness. In other words, there are some of the indicators that come off of the longer term that says the rally in here is fighting against some weak forces that are likely to turn it down again. And you see this one here, KMI, is orange. That's a 1, which says not only are there some long-term forces, but the very short term, it has come too far and it's likely to reverse for some number of days and some number of points until it works off that overbought condition. Remember, this has a volatility factor in it, and that tells us when it is overbought. So you can see in here generally that the XLE and these 10 stocks in here are quite positive overall, with a couple of them being overbought. KMI is overbought, PSX is overbought and likely to get a pullback. Now let's look at XLF right over here, and you could see the 10 weighted stocks in the financials right there, and you could see all of them bullish. You see that, and you know they've been making really good highs. You look at BRKB, that's generally just a fraction off of its 52-week high, and you could see where they are relative to the 52-week highs. They're all pretty close to that and very strong. Well, Goldman Sachs had a pretty good pullback recently, but they've been really strong. Now you look here, you can see that Berkshire Hathaway is extremely overbought. Look at that MCI reading at 100. That is not overbought. That is just telling you it is intensely positive. So positive that it's likely to pull back. This is orange. You can see the same thing right here at Wells Fargo. Very strong. Of course, it was a very beaten up stock, and now at the point where it's likely to give you some downward reversal in there. Wells Fargo is going to report earnings pretty soon. So that's the look that you get in there. Interestingly, Goldman Sachs, you can see the market condition indicator is now at minus 53, and that's telling you there's some longer term forces in there that maybe bear some watching. And of course, this one has moved down sharply off of its 52-week high. You can see BlackRock here red all the way across. That gives you some kind of indication of the kind of negative situation you have there for BlackRock. Let's just take a moment and let's switch over. I'm just going to click on BlackRock, and it's going to fill up this chart right over here. And you can see in here in BlackRock that its stock has been weak, coming down. This is the slim ribbon PO, which is the signal indicator for the slim ribbon, and you can see it's negative momentum. So that gives you an idea of the negative condition of BlackRock and this doesn't lie. I mean, the indicators really scream at you. Let me just scroll this up and we'll take a look here at the healthcare. So this is XLV, and you can see XLV, the reversal scout now is turned down. The market condition indicator is down at only 20 and it's red. The slim ribbon is in the neutral category, and so is the OBI. So these stocks in the XLV are not in great shape. Now look at Johnson, UNH, Pfizer, Abbott, Thermo Fisher, AbbVie, Lilly, all of those red in here. These stocks are not in great shape when you look at that. There's these numbers over here on the market condition indicator. Now, when they get to 20 and when they get under a minus 25 is when you really start to get into a negative condition. Here's a minus 85 on Danaher. You see that, how negative this stock is. So these are not stocks that you're going to want to be buying when you look at that. The XLV does not look great overall, and you can see that money has been flowing out of those stocks. Of course, tons of money went into them because of the pandemic, and now that there's hope the pandemic will be ending soon, then you have that condition that is likely to be not as good for those stocks. Let's look at right over here at the XLI, and you can see the industrials. Look at these green, 87.3 on the OBI, which is the most powerful you can be. This is all powerful, and that says the industrial stocks are strong. Now, when you look at Union Pacific and UPS, there's some indication here that there's been some deterioration when you look at that. You can see. Now, these are not that far off their 52-week highs, but you're getting a little sense. The MCI is down here in the 25 and 32 area, so not really strong, but OBI still says they're in good shape. So you're getting a mixed reading right in there. But here you can see Honeywell and Raytheon, Caterpillar, Boeing, GE, Deere. Triple M, Lockheed Martin, all those 10 other weighted stocks are looking pretty strong in here. Now look here at Boeing. You see that orange one that says it's extremely overbought, and that says look for a pullback. But because of these positive conditions, that pullback is likely to be a buy. So you get some great information just by looking at that. Remember, this is 99 stocks really we're looking at, 9 different groups at a glance, and you get a great sense for that. This is an amazing app, this Market Monitor. So XLB, the materials, you can see that it's a pretty mixed group when you look at this. There's some stocks like Sherwin-Williams that's pretty negative. You can see the market condition indicator at -11. Now this goes to -100 or +100. So -11, when it gets to under -25 is when it's confirmed that a negative, really negative condition. So that's not a great looking stock. Neither is Air Products. But then you look at some of these other stocks, Newmont, which of course is a gold stock. And gold has firmed up some. Neutral here on the OBI, so 72, a nice reading right there on the market condition indicator. So this is not bad. In Newmont, Dow is, well, this stuff isn't reading right now, but still not in bad shape right over there. DuPont looks really strong, slightly overbought, but not too bad. So that's a strong one. And look at these other ones in here. International Flavor and Fragrance, PPG, those are, PPG is, IFF really doesn't look good at all. And that's, of course, a stock that is only shortable in our what we look at right here. So that's a look at those, a great look at the XLB, the material stocks. Now we're in XLK. And XLK is the techs, Apple, Microsoft, NVIDIA, and Visa, MasterCard, Cisco, Broadcom, Adobe, Accenture, Salesforce. Those are the top 10 weighted in there. And look at where the money is coming out of in here, as you can see that. These are very weak stocks. These are not stocks that you're going to want to be buying. Look at Microsoft. Everybody was buying that one, pouring money into it. It is 44 points off of its all-time high, as you can see right over there. 52-week high was the all-time high, and some pretty negative readings. If this is -36, once it crosses under -25, it's pretty negative. Slightly oversold, but overall Microsoft, which was really a favorite, the money is pouring out of that. The same thing for NVIDIA, because everybody thought their chips were going to be so in demand because of cryptocurrencies, but of course cryptocurrencies, in my opinion, are in big trouble. So the NVIDIA, you could see that's really in bad shape. Money really pouring out of these. Look at NVIDIA, 81 points below its all-time high. Visa, that's a big move, 37 points below its all-time high. Look at these. They're way, way down from all-time highs. Very significant. I was trying to see if there was a percentage, way I could get the percentage from all-time highs, but it's really not available in there. So this is where the money is pouring out of in there when you look at that. Let's take a look here. I'll just scroll this so we can get this. Well, that's it. We've got it all now. So this over here is the XLC, which is a new one, which is the communications. And in there are Facebook, Google, both Googles. That's Alphabet. AT&T, Verizon, Walt Disney, Comcast, Charter, T-Mobile, and Netflix. And you could see Netflix, of course, they were buying like crazy. It's almost 200 points, 180 points below its all-time high. T-Mobile, 40 points. These are giant declines that they've had in here, but still, look at Telephone, Verizon. These stocks are actually pretty good. Telephone is overbought. You see it's orange right there, but a 99. That says to you, this is going to pull back. You might not want to short it, but you might let it pull back so that you could buy it again. That shows you a lot of strength in there. Charter, T-Mobile, horrible when you look at that. And take a look at Netflix. This is -1 orange that says extreme oversold. Look at this reading, -100 on the MCI. Remember, this is not an oversold indicator. This is an indicator of extreme negative condition. Market condition indicator is what that is. So Netflix really in bad shape. It could bounce. If it does, it's likely to be a sell. Here's XLY. You can see that right there. As we look at the consumer stocks, we have the consumer staples and the consumer discretionary. Amazon is in that category. And look at Amazon. This is so weak. This stock is now 550 points off of its all-time high. A lot of selling in here. It's slightly oversold. Minus 97. The condition is horrible. And it says if it tries to rally, well, look out. Tesla's still holding up okay. Now, the market condition indicator at 12 is eroding, but not too bad. Neutral here on the OBI, option bias indicator. So it's kind of mixed when you look at Tesla. Here you have Nike, which was really getting bought like crazy. It's 30 points off of its all-time high. And minus 96 reading there, oversold, very significant. As you could see, if it bounces, it's very likely to be a sell on that bounce. Same condition you have right over here in Starbucks. If it bounces, it's likely to be a sell. Let's take a look at the Starbucks chart just for the fun of it, so you get an idea as to what this looks like. This has our cycle analysis on there, and you can see the rhythms in this market when you look at that as it moves up. In these positive rising phases and then down in the corrective phases, up, down. And now this is so negative in here. Remember, this is oversold. You're likely to get a bounce. A bounce could be all the way up here to 108, but then it's likely to be moving down again. I want to short this one at 108, so you get a pretty clear look at how you can go from the market monitor to the individual charts. Target is, you could see it's still, the reversal scout's still holding up there, but some of these more sensitive indicators are really negative. So Target is not looking in great shape either. And Ford, absolutely phenomenal. You can see that right there. As its reversal scout, positive, slim ribbon, positive, 100 reading on the market condition indicator, and a positive 3 on the option bias indicator. And of course, it's right at its all-time high. And this is all about its move into electric vehicles, and it's at the high for the year, and probably still has more to go. And here's XLP, and you could see there in these consumer discretionaries that are listed in there that mostly they're in good shape. Costco is not in good shape. When you look at that, it's pretty significantly off of its all-time high, or 52-week high, which is the same. When you look here at Pepsi, that looks great, doesn't it? Really solid. When you look here at Ford, again, that looks solid. I jumped out of that group. Here is right here, Walmart. Actually, this one is a tough one. This one still looks pretty solid when you look there. The MCI is just a little bit low, but the stock's only about 7 points off of its high, so that looks pretty good. That is a look at the market monitor. I want to give you one more little look at how you could use this. I talked about the OBI, the option bias indicator, and that, you know, when it's at orange, it tells you that when it's at an extreme and likely reverse. So I'm just going to click on this because you can scroll, as you see right there, and I'm going to go down and I'm going to look for the orange readings. So all of these stocks, you can see, all but one, are all green all the way across. When you look there, that is Phillips, Kinder Morgan, Berkshire Hathaway, Wells Fargo, Boeing, Deere, Telephone, and Philip Morris. All of those are super powerful. Look at these MCI readings right over here. All super powerful, all orange. So if you were long these stocks, or you had an option bias that was to the long side, you would now want to neutralize that, because this is telling you the probability is high of pullbacks in these stocks. Now, they may not be shortable because of this issue right over here of them being all really, really strong on all the other indicators. Now, if I continue to scroll here, you'll see two stocks right there. That's Netflix and Nike that are really negative stocks. Look at those readings, minus 100, minus 96 on the MCI, but they are ready to bounce. You can see that right there, and there's actually one more there. It's also a Starbucks, and you can see that. And I just showed you that Starbucks chart, that it is ready to bounce. So these are three very negative stocks that if I was short them, then I would cover, because I think that they are going to reverse to some reasonable bounce. Remember, we said 102 to 108 in Starbucks is a likelihood. So, and then I'd be shorting them again. So you get a good idea of that. You can also scroll on any of these and see, which are the most negative. Here's your reversal scout right there. And here's the most negative on the slim ribbon. And here's the most negative here on the MCI. You can see that. Or you can look for the most positive under there. And there's all your positive ones right there in the slim ribbon. It gives you a great way to use. This is a great tool. So I really encourage you, if you're not a level 4 member, you could easily become one by, if you're a member, you can upgrade, or write to team@askSlim.com and ask them for the information on becoming a level 4 or 4+ member. And you have to be a TD Ameritrade account holder to be able to use this, because it runs off of Thinkorswim, and you can just sign up and open an account right on our page there. So I took a kind of a long time looking at this, but what a great way to get a sense for the condition of these stocks on our 4 great proprietary indicators. I hope you loved that. And again, write to team@askSlim.com for more information on the level 4 membership and the market monitor. Thanks for watching that. All right, coming up, our stock market analysis. But first, we're running our level 2 trial. This is the last week that we're going to show this to you. So this is just unbelievable information for level 2, a 50% discount that we're offering right now, because this is really for shorter term traders, index traders, and people that are learning about the markets. Fantastic information. You're going to get our stock index report. It's a live stream where that SAR live stream looks at the S&P 500, the NASDAQ, and the Russell on 15-minute charts with our proprietary analysis. You're going to get our stock index report. This comes every afternoon with fantastic information on the indexes. You're going to get our live chart streams on the S&P 500 that looks at multiple time frame analysis. I'm going to show you little pictures of these in a second. Stock in the ETF review weekly, you're going to get that, and that has some great information on the key ETFs. Our Slimulator Momentum Tracker for longer term holders, over 1,000 symbols on there with all of the amazing information on the momentum conditions and some of the evidence on these individual symbols. You can look at them in sectors also. You're going to get our askSlim video library. Unbelievable. More than 600 videos in there in 9 categories. Fantastic information and great ways for you to learn all about engaging in the markets, technical analysis, the trader psychology information, all kinds of things about the markets that is important to you, and our new trader workbench with an amazing look at our focus list in their worksheet, and I'm going to show you that. Try it out for a month for just $29.50. I think you're going to be amazed. Let's take a look really quickly here. This is our live stream, SIR live stream. This is from yesterday on the 13th. And what you're looking at right in here is this great look at this reversal scout right in here. The yellow areas are acceleration zones. Those are the areas where once it gets into it, the odds are pretty high it's going to move through it. You see it move straight down through those acceleration zones. This is the S&P 500, the NASDAQ, and the Russell. The Russell was a little bit stronger, and you could see that right in here. So that tells you all of that, but you get a great sense for the direction you want to be in and which ones are the best longs or shorts. It's help with directional decisions and ways to maximize your winning trades. 15-minute live charts. You don't need any special kind of a platform when you look at this. We broadcast it right through our website. chart streams live multiple time frame charts. Look at this, market conditions at a glance when you look at this, and help with timing and direction. You get weekly, daily, the 2-hour and the 15-minute charts with all of our proprietary indicators in there, and this is all live, running live for level 2. Level 3 gets 10 different symbols, but for level 2, for index traders, we're putting in the SPX live on multiple time frames. And our workbench with now these enhanced worksheets where you get all of our 84 symbols. And this is the, all you do is click on these little things right over here, and you get our charts pop up in static version so you can see our analysis. And also now added cycle low timing. In other words, when are those bottoms going to come in these cycle rhythms? Well, we give those to you so you get a sense on all of these symbols. Fantastic information. And our video library, Future Speak on Wednesdays. It's an hour and 15 minutes where I give you about 50 charts and deep analysis, teach you cycle analysis, and teach you about trading in there. Tools for text, there's over 80 videos in there that talks all about charting tools and studies. Trader psychology, about 25 different videos where I talk about personal issues. Stock sectors, which Arvind is now doing a fantastic job of looking at these important ETFs or stocks ready to pop or drop. Big picture analysis goes in there where we have a big a look at the longer term perspective of major markets, style, strategy, and plan, many subjects about trading. I have now put in 5 guided visualizations where we look at the 5 different emotions where you may be triggered by the market, need some help getting through that. Well, there's your help right over there as I walk you through a process in each one of those. Of course, the Market Week archives and our askSlim Live archive when we do these live events, and we put our replays of that in there. All of those amazing videos that you get to see. It's just incredible. All of that, everything that you see here, just $29.50 for the first month for new subscribers. Make sure that you don't miss this opportunity, because if you want to learn about the markets, if you're a short-term trader, intermediate trader, swing trader, option trader, so much, this just will fit into your learning process, and our analysis will be a guide for you to apply it to the ways that you engage in the markets. Level 2 trial, this will be the last week we bring the level 2 trial in this round, and this is really a great time to take advantage of it. $29.50 for a month. How can you not do this? Thanks for listening to that. All right, stock market 1 to 3 month view. You know what I do? I look at a few charts in here. If you want to see all of my analysis on the major markets, I'm going to invite you. This is one invitation that you don't want to miss. Analysis of 5 major markets I'm going to do live. I'll take the regular charting and compare what this other dimension is of cycle analysis and do it on the stock indexes, bonds, gold, and oil at the Wealth365 Summit. Over 50 speakers in 6 days. It starts this Monday and on the 17th. I'm speaking Thursday, January 20th at 10 a.m. Eastern Time. I'll do this presentation, and we're going to give away in a drawing, Wealth365 is doing this, a cycle analysis workshop worth $1,297. So please do sign up. You can sign up using the link in the YouTube description if you're watching this on YouTube, or the Twitter post that we'll put up. And members have already received an email with that link, so make sure you take advantage of it. Analysis of 5 major markets at the Wealth365 event. I'm going to do that this Thursday, January 20th, 10 a.m. Eastern Time. All right, let's take a look at the stock market. We'll take a 1 to 3 month view of the stock market here, and we're going to look actually in a reverse order, because I'm going to take it from weakest to strength, from the Russell to the NASDAQ to the S&P 500. So let's take a look here as we switch over, and this is the Russell. And of course, you're looking at cycle analysis right in here. And what you see on the bottom, if you're brand new, are cycle brackets. These essentially are a look at the rhythms in the market, the heartbeat in the market. And this is what's called a harmonic family, where you have a dominant, an intermediate, and minor cycles in there. And the minor cycle that you look right there is about 11 weeks long. This is 22 weeks long right over here, and this is 44 weeks long. I'm sorry, 66 weeks long. So let me make sure I tell you this right. This is 22 weeks long, 11, and 66. For those of you that are learning how to do this. Now, you'll notice that this cycle right in here is a neutral cycle. It moves sideways. This one, it didn't quite take out that low, and then this one just barely took out that high and began to move down. So you have a neutral cycle right in here and a neutral cycle. Now, this big dominant cycle, if it was exhibiting a large upward force, it would not allow this to come down as far as it did. So that low right over there on that cycle, and you could see the nesting of the minor and the intermediate right there, was at 2107. It rallied up here into the sell zone and bullseyed that and began to pull back. If it breaks under 2107, it is going to say that all of these cycles are pointing to the downside, and that would point to a collapse. So, I don't use the word collapse easily. I don't use the word crash very often at all, but this is an example of the type of setup that puts huge pressure on the market on the downside. See, this right over here is the reversal scout. That's our proprietary momentum indicator, and also helps us with the cycle analysis. That's where the negative momentum occurred right at that point, and it is, you see, negative right in here. Under 2107 will confirm a bull market top. And that would be a really bad thing, of course, if that happened. Now, it could break under here and then bounce up again, and you can see what we're looking at in here are the rhythms right in here. But really, we're projecting down when this is all over with, maybe as low as 1830 that you see right over there. And yes, bear market. It has a bear market look to it. To fix it, it would need to move over that 2290 area. It's a long way on the upside. That's what would repair this situation. So we'll say that the probabilities of that are extremely small, and that the Russell is looking quite negative. 1 to a 3 month view would be maybe some bouncing around in here and then coming down at some point, breaking 2107. If it broke under there, we would look for the short term at about 2031, and then a bounce into this area. We have March, around early March is the time for this impulse on the downside to end, an attempted rally, and then down again in some significant way. We actually don't have this projected as deep as I really think it could end up looking at that. Let's take a look now as we switch over to the NASDAQ and the X, and this is the next weakest one that we're going to look at right in here. And the NASDAQ, you can see right here is where that momentum turned negative. It's a lot of lines laying in there, so it's a little hard to see that momentum is negative. Came into this support zone right over here, is trying to hold in there, and you could see the minor cycle right there is where it bottomed right here. The next cycle rallied and then failed and took out that low. What that says is that there is a deep sell-off coming here into March, and the downside target best case is around 13,850. So the next 1 to 3 months really is attempted rallies and support over here, but then we believe a really hard sell into late February and into early March. That aligns timing-wise, of course, with what we showed you in the Russell just now. Now, S&P 500 is stronger as the heavier weights of the industrial stocks are playing in here as money moves into those industrials or financials, but the financials starting to fail a little bit right now. Here's the momentum, flat, as you can see. It's trying to move down, trying to move up, couldn't do that. This is your key, 44.95. If it breaks below 44.95, it declares a major top. Again, these declines point to the potential of coming down to under 4,200 over here. If it was a super bullish condition and just correcting in a mild way, maybe you get support under 4,500. That's 44.82, 44.92, right in there. Those are spots where it could stop, but really believe that you're going to get a harder sell right over here to the major 23, which is right around 41.80, 41.90 there. So a lot of risk. Some of the evidence that we're looking at when we look at all of the time frames and all of the momentum conditions says that the stock market is in some trouble. Right now, we have breakdowns in the NASDAQ, we have breakdowns in the Russell on the shorter terms, and that really is suggestive with negative momentum in those that it's going to exhibit a lot of downside pressure. The S&P 500 stronger, and that is representative of the great rotation that is going on right now out of growth and out of low caps, essentially, into these kind of solid industrial companies and financials and energy. Certainly, that's likely we're going to see that for a while. The rotation that's going on as the market does build this top that it's in. And of course, we're looking for this hard sell that we've been talking about in this period of risk that comes somewhere mid-January to early March. That period of risk, anytime in that window, we could see some very hard selling coming in. And the bottom of that impulse is suggestive to be right around the end of February to the beginning of March period. That's a time when there is the greatest risk. That's the S&P 500. I hope you found that just absolutely fascinating. All right, I want to remind you, do go to askSlim.com. If you're new, become a free member on YouTube, subscribe to the channel, click that bell so you get notified. Give it a thumbs up, of course, and watch our member videos in the playlist there, give you a good feel. On Twitter, follow us at askSlim, and questions on all of this membership stuff that we shared with you today, please do write to Matt at askSlim.com, and he will be able to help you. That is it for today. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna